Accounting for bills of exchange. So we have definition of negotiable instrument. As per legal terminology, the word negotiable means transferable from one person to another, and the word instrument means any written document by which a right is created in favor of some person. So negotiable means transferable and instrument means written document. So what I'll do is I'll draft a check. Okay, so that means amount from my bank account is transferable to your bank account. That instrument is in favor of some person. Therefore, negotiable instrument means any document which entitles a person to certain sum of money and which is transferable from one person to another by delivery or by endorsement, and delivery in accordance with the provisions of Negotiable Instrument Act 1881. So here we have negotiable instrument. Meaning of negotiable instrument is any document which entitles a person to a certain sum of money. So entitle means if I'm drafting check in favor of some person, that means I am supposed to pay certain amount to that person. According to Section 13(1) of the Act, negotiable instrument means a promissory note or a bills of exchange or a check payable either to order or to the bearer. So negotiable instrument means it can be anything. It can be check, it can be uh, uh, bills of exchange, it can be promissory note, it can be anything. With the help of that document, you are paying certain amount from one person to another person. Negotiable Instrument Act 1881 is an act to define and amend the law relating to promissory notes, bills of exchange, and check. What is Negotiable Instrument Act? Negotiable Instrument Act is an act which will define different instruments. Okay, with the help of different instruments, we are making payment. Definition of bills of exchange. According to Section 5 of Negotiable Instrument Act 1881, bills of exchange is an instrument in writing containing an unconditional order signed by the maker. I am making, so signed by the maker, directing a certain person to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. So, according to Section 5 of Negotiable Instrument Act 1881, bills of exchange is an instrument in writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money only to or to the order of certain person or to the bearer. So what I'm doing is I'm drawing up a document. That document is known as bills of exchange. Acha, before that also, what is bills of exchange? I want to understand in a layman language. What is bills of exchange? Bills of exchange, when bills of exchange comes into picture, let us try to understand in a simple words from layman point of view. So what happened is I went to a shop and I mentioned that I want a dress. Okay, and that dress is of 1,000 rupees. Now he is selling that dress to me. I told him that okay, I don't have cash right now. I'll pay you after 1 month. I don't have money. I'll pay you after 1 month. So he is okay with that. He's okay that if I pay after 1 month. So here what is happening is I'm supposed to pay after 1 month. So here he will draft something, matlab, as a proof, as a record. So he on a piece of paper he'll write it down that I will be paying. I have purchased dress of 1,000 rupees on this date. Okay, and I'll be paying that amount after a month, after 30 days. And he will sign, I will sign, stamp, dates, and etc. So that is a legal document. That document is known as bills of exchange. So when bills of exchange comes into picture, when you have credit sales. If you have cash sales, it will not come into picture. But if you have credit sales, it will come into picture. So according to Section 5 of Negotiable Instrument Act 1881, bills of exchange is an instrument in writing containing an unconditional order signed by the maker directing a certain person to pay certain sum of money only, or to the order of certain person or to the bearer of the instrument. So here whoever is making that instrument on his order, or whoever is the holder of the instrument, that person will get the money. Okay, that is bills of exchange. I'll take a pause, a quick read till here, then we'll go for next 3 points. Who will? Obviously the customer will pay the money. Suppose if I am the maker, I cannot pay you the money, right? I cannot pay you the money. I am the shopkeeper. I am the maker of bills of exchange. I am the shopkeeper. I am the maker of bills of exchange. I am supposed to receive the amount. According to Section 5 of Negotiable Instrument Act, okay, that definition is done. A promise or order to pay is not conditional within the meaning of this section and section 4 by reason of the time for payment of the amount or any installment thereof being expressed to be on the lapse of certain period after the occurrence of a specified event which according to the ordinary expectation of mankind is certain to happen although the time of its happening may be uncertain. So we have a promise or order to pay is not conditional. So if it rains, I'll pay you money. So it's a promise. It is not conditional order that yes, I need amount. Within the meaning of this section and section 4 by reason of the time for payment of the amount or any installment thereof being expressed to be on the lapse of a certain period after occurrence of specified event which according to the ordinary expectations of mankind is certain to happen. Then we have some payable may be certain within the meaning of this section and section 4 although it includes future interest or is payable at an indicated rate of exchange or is according to the course of exchange and although the instrument provides that on default of payment of an installment the balance unpaid shall become due. So we have a promise. That promise is not conditional that okay, if I promise you that if it rains I'll pay you. It is not conditional. Whatever happens, rain, no rain, I have to pay you. Some payable may be certain within the meaning of this section and section 4 although it includes future interest or is payable at an indicated rate of exchange. Some payable may be certain. Some payable may be certain. It is not uh, uh, like okay, I don't want this amount. I don't want. It is certain. I know that I'm supposed to pay only 1,000 rupees. No, nothing extra, nothing less. The person to whom it is clear that the direction is given or that payment is to be made may be certain person within the meaning of this section and section 4 although he is misnamed or designed by description only. So definition of bills of exchange. Essential elements of bills of exchange, very very important answer. You can expect this question for your exam. 2 marks, 4 marks, 6 marks. Following are essential elements of bills of exchange. It must be in writing and may be in any language and in any form. It must be drawn on a particular date. There are three parties to bills of exchange: drawer, maker, drawee and payee. It must be signed by the drawer and or the maker. It must contain an unconditional and imperative order to pay. The order to pay must be directed to a certain person. The order must be to pay a certain sum of money only. It must be accompanied with proper stamp as per the requirement of law. So we have essential elements of bills of exchange. So it must be in writing. You cannot verbally, we cannot discuss. It must be drawn on a particular date. Amount needs to be paid on a particular date, signed by the maker, drawer, okay, the other party, customer, it should be signed by customer also. It should be stamped. It should have a direction that yes, I want to pay. It must be accompanied with proper stamp as per requirement of the law. Okay, so essential elements of bills of exchange means it should be proper, it should be thorough. A quick read, I'll take a pause, then we'll go for parties to bills of exchange. We have parties to bills of exchange. So there are three parties. Drawer. So I am the drawer of bills of exchange. Drawer means what? Drawer means I am the shopkeeper. I have made a credit sales. So I am the one who will be making bill. So drawer is the party that issues bills of exchange. Creditor, lender or seller. He is the maker of the bill and his signature is necessary. Drawee is the party to which the order to pay is sent. Debtor, lendee or purchaser. The drawee means the customer. Okay, drawee means the customer. Then we have the payee. Payee or the beneficiary is the party to which the bills of exchange is payable, may be drawer or other party. A quick read, I'll wait for a minute. So we have drawer, drawee and payee. Drawer means the person who is the shopkeeper. That shopkeeper is drawing that I'm supposed to receive 1,000 rupees after a month. Drawee means a customer and payee means the beneficiary. Now suppose me and shopkeeper, we both are there into picture. Me and shopkeeper, we both are there into picture. Now shopkeeper told me that please don't pay amount to me, but instead of me pay to shop A. So shop A is the payee, he is the beneficiary person. Okay, we are required to pay that amount to him. So parties to bills of exchange. Then we have classifications of bills of exchange. Again, very important, very important. Documentary bill, demand bill, usance bill, inland bill, clean bill, foreign bill. So they have given you list of bills. Here they can ask you in the form of fill in the blanks, in the form of one word, in the form of one mark question, right? What is documentary bill? What is trade bill? What is supply bill? So these classifications very important. Documentary bill. In this, the bills of exchange is supported by the relevant document that confirms the genuineness of sales or transaction that took place between the seller and the buyer. So we have documentary bill. Documentary bill means genuineness. I want to understand that yes, there is a genuine transaction between buyer and seller. So we issue a bills of exchange, and that document bills of exchange is supported by one or two document, say delivery order, lorry receipt. Okay, that confirms that yes, this transaction is genuine. Demand bill. This bill is payable when it is demanded. The bill does not have a fixed date of payment. Therefore, the bill has to be cleared whenever presented. No fixed date of payment. Today shopkeeper will call me, and shopkeeper, that is drawer, will call me and drawer will say, please clear off the payment. I will have to clear off the payment. Usance bill. It is the time bound bill, which means the payment has to be made within the given time period and time. Inland bill. An inland bill is payable only in one country and not in any foreign country. That is domestic bill. This bill is opposite to foreign bill. Clean bill. This bill does not have any proof of document, so the interest is comparatively higher than the other bills. Then we have foreign bill. A bill that can be paid outside India is termed as foreign bill. Two examples of foreign bill are an export bill and import bill. Clean bill is this bill does not have any proof of document. So the interest is comparatively higher than the other bills. Foreign bill is, it can be inland bill or it can be export bill, import bill. I'll take a pause, a quick read till here, then we'll go for accommodation bill, trade bill and supply bill. Accommodation bill, a bill that is sponsored, drawn, accepted without any condition is known as accommodation bill. So a bill that is sponsored, drawn, accepted without any condition, no condition, nothing, that is accommodation bill. A quick read, I'll take a pause. Then we have trade bill. This kind of bill is specially related only to trade. Trade means what? Buying and selling. Buying and selling, trade. Supply bill, the bill that is withdrawn by supplier or contractor from the government department is known as supply bill. So supply bill means what? The bill that is withdrawn by supplier or contractor from the government department is known as supply bill. So classification of bills, and these classification of bills of exchange is very important answer. You can expect one question from here. Define inland bill. What is foreign bill? What is accommodation bill? 1 mark, 2 mark. In the form of MCQs they can ask you. Now we have difference between trade bill and accommodation bill. So trade bill objectives. These bills are drawn to facilitate the trade transactions of sales and purchases of goods. Accommodation bill. These bills are drawn to help someone in the need of financial assistance. So we have trade bill and accommodation bill distinction. So what is trade bill? Trade bill is whatever you do by default, bills will come into picture. Why? Because you are dealing in your transactions, sale purchase. So obviously trade bill will come into picture. The bills are drawn to help someone in need of financial assistance. That is accommodation bill. Okay, you want loan, you are my friend, you want loan. Okay, so we need some document between us. So on a piece of paper, I'll write it down that Mr. A, my friend, he borrowed 1 lakh rupees from me. So that's accommodation bill. Consideration. There is a definite consideration for which the bill is accepted. So 1,000 rupees. The sale transaction is of 1,000 rupees. So there is a definite consideration for which bill is accepted. These bills are drawn without consideration. Extension of credit. Trade bills are a form of credit extension. These bills are not a form of credit extension. Proceeds. When trade bills are discounted, the proceeds remain the holder. When these bills are discounted, the proceeds may be shared by two parties in an agreed ratio. Recovery. If trade bills are dishonored, the amount may be recovered easily through the court. In case of dishonor of these bills, the drawer cannot file a suit against the drawee. So we have 5 points for trade bill and accommodation bill. Then we have maturity or due date of bills of exchange and days of grace. So maturity date. So here suppose I am drawing bill on 27th Feb. So 30 days to it, if I add, I'll get 27th March. So 27th March is my maturity date. 27 March is my maturity date. Now to that also I am supposed to add 3 days of grace days. So 27 plus 3, 28, 29, 30. 30th March is my day on which I am supposed to pay. So maturity date in case of on demand bill, at sight bill, on presentation bill. So we have demand bill, at sight bill, on presentation bill. Very, very important. This chapter is little difficult and very important. The bill is at site becomes due for payment as soon as it is presented for payment. At site means what? Today I am presenting for payment, so today it will become due. In case of instrument payable on demand, no time for payment is mentioned. Such bills are not entitled to days of grace. Sorry. Sorry. So we have a bill at site becomes due for payment as soon as it is presented for payment. Then we have instrument payable on demand. No time for payment is mentioned. Such bills are not entitled to days of grace. Maturity date in case of after date bill. In case of bill after date, the time for payment is mentioned. 3 days of grace is allowed on such a bill. So bill after date, the time for payment is mentioned. 3 days of grace, that's what we discussed. 27th Feb to 27th March. To that we have to add 3 days of grace. We will get our maturity date in case of after date bill. So such type of thing is not mentioned for at site bill. See, here they have mentioned such bills are not entitled to days of grace. So which bills are not entitled for grace days at site? After date bill, sorry, after date bill requires 3 days of grace. Maturity date in case of after site bill. So we went for at site, after date, after site bill. In case of bill after site, payable at a fixed period after site, the period begins from the date of accepting the bill. 3 days of grace is allowed on such a bill. I'll take a pause, a quick read, then we'll take grace period. When the period of bill is given in months, in this case, the maturity date is calculated according to calendar months. See, if your question specifies 12 months, then you have to add 12 months. If your question specifies that 2 months, 2 months. If it specifies 30 days, then take in 30 days. Okay, 20 days, take in form of days. If it specifies in the form of years, which is very, very difficult, no one gives credit period for years, then it will be 365 days. So in this case, the maturity date is calculated according to calendar month, ignoring number of days in a month. 3 days of grace period are added. For example, if a bill dated 4th May 2022 is payable 3 months after date, that means you have to add grace period. So 4th August 2022, to that if you add grace days, it will be 7th August. 4 months, 4th May. 4th May to that 3 months. So May, June, July, August, 4th August. To that 3 days, that will give you 7th August. When the period of bill is given in days, maturity date will be calculated in days. This excludes the date of transaction but includes date of payment. When we entered into transaction, that date will be ignored, but when we made payment, that date will be included. 3 days of grace period are added in this case also. If a bill dated 5th June 2022 is payable after 65 days, then the maturity date will be, so you have to count in form of days and add 3 days of grace. A quick read till here. I'll take a pause. When maturity date falls on a national holiday, say 2nd October or 26th Jan, if the due date of bill is on national holiday, then the maturity day of the bill shall be the preceding business day. I know that bill will fall due on national holiday, that is 26th Jan, then what you can do is make payment on 25th Jan. Okay, one day prior. Now suppose maturity date is an emergency day. Okay, when the maturity date has been declared as emergency holiday, then one day after, suppose 27th Feb is emergency holiday and today was my maturity, then please make payment on 28th Feb. So if the due date of bill is declared as an emergency holiday, then the due date of the bill shall be after one day from the date of maturity. If the due date of bill is 25th July and it is declared as an emergency holiday, then the due date will be 26th July. Concept of bills receivable and bills payable. So what is bills receivable and bills payable? Bills receivable means I am supposed to receive 1000 rupees from Mr. A and I have a document related to that 1000 rupees receivable, that is bills receivable. I am supposed to pay 500 rupees to Mr. B and I have a document related to it, so that document will be known as bills payable. Let us give a quick read. Bills receivable for person who draws bills of exchange and is entitled to receive its payment is known as bills receivable. The drawer of the bill will show bills receivable on the asset side of the balance sheet. For the persons who accepts the bill and is liable to make its payment is known as bills payable. The drawer of the bill will show bills payable on the liability side of the balance sheet. A quick read. I'll take a pause. Then we have journal entries in this chapter, and then we have sums. So what I have done is I have divided into theory content, one lecture, then next lecture will be journal entries, and third lecture will be related to our sums. Thank you.